Welcome to my channel. Please like, comment, and subscribe. In general, the insurance agreement must meet the general term of the agreement. However, the agreement that governs insurance has a special, unique, and firm character compared to the other types of agreements. The general provisions of the agreement in the Civil Code can apply to insurance agreement as well. The following are the principles of the agreements. 1. The principle of freedom of contracts. In contract law, the scope of the principle of freedom of contract includes freedom to make or not make a contract, freedom to choose which party to make an agreement with, freedom to determine or choosing the content of the contracts, freedom to determine the objects of the agreement, freedom to determine the form of a contract, freedom to accept or deviate from optional provision of the etc. It should be noted that the guidelines for freedoms of contract are individual freedom, so the starting point is individual interest as well. The principle of binding provisions. The relationship with insurance means that the insurer and the insured must carry out the agreed term of the agreement, because this agreement has binding legal force. The principle of trust. This principle means that the insurer and the insured foster mutual trust in the insurance agreement. This is important so that both parties are willing and bound to fulfill the agreements. The principle of legal equality. This principle is that legal subjects who enter into an agreement have the same position, rights, and obligations under the law. The principle of balance or provid. This principle is a principle that requires both or parties to fulfill and carry out the agreement. In the insurance agreement, the right and obligation of the insured are to pay premium and receive compensations, while the rights and obligation of the insurer to receive premium and provide compensation for the object insured. The principle of balance becomes important in the event of an event that causes a loss. Then the loss must be replaced in the balance with the risk borne. Insurance agreement principle. Because the insurance agreement is a special agreement regulates, this agreement does not only have legal principles, but also several principles. These principles are as follows. The principle of insurable interest. The insurer has an interest in the insured object if he will suffer financial losses in the future. This anticipation of financial loss allows the insurer to insure his property or interest. If an accident occurs on the object being insured and it is proven that the insured has no financial interest in the objects, then the insured are not entitled to receive compensations. The above provisions underlie the existence of an interest in the entering into an insurance agreement. This provision is what distinguishes insurance from games and gambling. The principle of excellent good faith or utmost good faith. The implementation of this principle imposes an obligation on the insured to clearly disclose all important facts relating to the insured objects. This principle also applies to the insurer or insurance company, they must explain the risks that are covered and excluded or terms and conditions of coverage carefully. The obligation to disclose this fact applies from the time the insurance agreement is discussed until the insurance contract is concluded. Thank you for watching this video. Don't forget give like, comment, and subscribe. Welcome to my channel. Please like, comment, and subscribe. Broadly speaking, the function of insurance is to provide financial protection, guarantees from an insured who buys insurance product from an insured. In this case, an insurance company. However, many of us may not quite understand the function of insurance. Basically, the insurance function itself is divided into three, namely 1. Primary functions, 2. Secondary function, 3. Special functions. Okay, let's discuss one by one. 1. Primary insurance. Function insurance serves to transfer risks from the insured to the insurer. The main of primary function of insurance are as follows. 1. Transfer risk. Insurance has a function as a risk defender. For example, when a family head dies, the family's financial condition is at risk on declining. If the head of the family has life insurance, then the family can receive insurance money that can be managed to meet the needs of life. 2. Raising fund. Raising fund, another primary function, is to raise funds. This fundraising activity aims to collect funds from policyholders through paid premium. With this fundraising, insurance companies can carry out the first primary functions. This is to transfer risk through claim payments. 3. Ensure a balance between premium and protection. Another function of insurance is to ensure a balance between premiums and the protection provided. This function makes policyholders do not have to pay a lot of money to get protections. Later, the insurance company will calculate all the risks that may occur according to the premium paid. So, every risk experienced by policyholder will not necessarily get the same reimbursements. This can happen because the premium cost and the risks insured are different for each person. And the next, secondary insurance. Function in addition to the three main functions already mentioned. Insurance also has a secondary functions. Here's the review. 1. Export indirectly. We may think that insurance is only limited to the life protection, but apparently, insurance also always someone to sell goods abroad. This is because insurance can provide protection for products to foreign countries. This product protection can be obtained from insurance products that provide protection for long-distance shipments. 2. Stimulate economic growth. Insurance is known to trigger economic growth, although this is not a direct function. In this case, insurance can create jobs through position in the company, so that insurance can indirectly boost the country's economic growth. And then, special insurance function. In particular, insurance has several functions based on the type of insurance selected. The specific functions of insurance are as follows. 1. Life insurance. Life insurance is usually chosen with the aim of avoiding financial risk due to the spine dies or is unable to work anymore. This insurance is very suitable for those who are married. By choosing this insurance, the family's economic condition will be more secure. 2. Health insurance. Health insurance is protection program for customer in case of illness. So, holders of this insurance can get treatment without the need to spend too much money, because they can claim the health insurance they have. 3. Education insurance. This insurance serves to protect children's education. Thus, when children enter school, parents do not have to worry about their school fees, because there is insurance that can cover the cost of education in accordance with the agreement at the beginnings. 4. Loss insurance. The function of this insurance is to reduce losses due to damage or lost assets. Okay, thank you for watching this video. Don't forget give, like, comment, and subscribe.